ladies and gentlemen. It is my absolute pleasure to welcome Andrew Griffith MP, Economic Secretary to the Treasury and City Minister to IFGS 2023. As the Minister responsible for financial services in the UK, Andrew Griffith has been a champion of our world-leading UK FinTech sector. He was extremely active in engaging with tech firms during the Silicon Valley Bank crisis and quickly finding a solution that worked for them. He is leading the modernization of the UK's regulatory system, including a framework for crypto assets and a proportionate pro-innovation approach to regulation. And he is very engaged in developing the UK's investment environment for funding from startups through to IPOs. It's my pleasure now to welcome Andrew Griffith MP, Economic Secretary to the Treasury and City Minister, to the stage.
Good morning. It's great to be here. Thank you very much, Janine. And thank you to everyone at Innovate Finance who is involved in putting such a fantastic event on today. As often, you're really kicking off UK FinTech Week in style. And it's wonderful to be in this beautiful space, isn't it? A venue constructed in the 15th century. A brilliant juxtaposition between the proud and storied tradition of financial services and our heritage in this country with all of you who are creating our future. Let me just scene set, if I may. My overriding objective as Economic Secretary, as City Minister, as your Minister, is to ensure that the UK is the most innovative, most international, and most business-friendly economy anywhere in the world. I want the UK to prioritise growth, risk-taking, and wealth creation, and to celebrate it for the moral good that it is. As we chart our way forward with the ability of being able to make our own rules for the first time in decades, it's never been more important that financial services are at the heart of those efforts. That's the objective that the Chancellor, the Prime Minister, and I all share for you, for the sector. Innovation. All of you in the dynamic FinTech community have a huge role to play. Bank accounts, payment services, the ability to borrow, to save into a pension, make other investments, buy insurance, provide tools to better understand finances or to shop around, offer tremendous benefits for their users. They create ladders of opportunity, the ability to transfer wealth over a lifetime, the chance to provide for our old age, or to shield us from some of the adverse events that life can throw at us. So whilst I'm proud that we have so many large and long-standing firms in this sector, it's rare that legacy firms have the ability to innovate at the pace required to make the most of changing technology and to keep us internationally competitive. You and your success is vital for the economy in improving productivity, creating choice, and reaching out into underserved segments of the market, which is why I'm glad that as a location for fintechs to base themselves on many fronts, the UK is leading the way. Indeed, the sector here goes from strength to strength. Data from FinTech Labs shows that almost half of Europe's FinTech unicorns are based here in the UK. And Innovate Finance found that last year the sector attracted more inward investment than the next 13 European countries combined. Our own commitment to supporting UK FinTech is reflected in the actions we took, working with the Bank of England to facilitate the private sale of the UK arm of Silicon Valley Bank to HSBC last month. I know many of you in this room were directly affected by the potential collapse of SVB UK, and I'm glad we were able to act decisively to secure an outcome which protected both your capital and ensured the continuity of banking services. Throughout that period, I and other ministers were accessible and constantly communicating with the sector, such as with Janine. Government isn't perfect, but I hope that when the chips were down, we demonstrated the benefits of being a sovereign nation with the ability and the agility to make its own decisions fast. But that's just the start. Our belief in this sector is also evident in the proactive steps we're taking to ensure you continue to thrive in the years ahead. Importantly, the government will reflect on submissions to the Payment Services Call for Evidence and introduce an agile regulatory framework for payments and e-money that promotes growth and supports an internationally competitive payment sector. We're also fostering innovation by making the UK a safe jurisdiction for crypto asset activity. We set out plans in our wide-ranging consultation published in February, and we want to proactively support the introduction of distributed ledger technology and tokenization wherever it makes sense. At the same time, I was pleased to launch the Treasury's joint consultation with the Bank of England on how we move forwards with a sovereign or central bank digital pound. Private wholesale digital currencies are likely to come to market first, and we're already creating the legislation to enable those which are fiat-backed and used for settlement in the current financial services bill going through Parliament right now. And we have the upcoming Financial Market Infrastructure Sandbox, which will help industry adopt and scale digital solutions that could radically change the way markets operate. That'll be up and running later this year. One of the most important steps we've taken to support financial innovation over the last 2 years has been implementing Ron Khalifa's FinTech review. Since being appointed, I've upped the pace of delivery, and a few weeks ago we launched the Centre for Finance Innovation and Technology, CFIT, in Leeds, where FinTech itself adds 700 million to the local economy. CFIT is backed by £5 million of Treasury seed funding, along with another 500,000 from our partners in the City of London Corporation. Its central task is to bring together industry players, entrepreneurs, policymakers, investors, academics, to coalitions to address some of the trickiest challenges facing the sector. And I'm delighted to announce today that CFIT's first coalition will look at open finance and how unlocking financial data can benefit small businesses, entrepreneurs, and consumers. Everyone in this room, I think, understands how data can radically empower individuals and businesses alike. McKinsey estimate that opening up financial data could boost UK GDP by a very useful 1.5% by 2030. So CFIT has my full support as they go after that opportunity. Open finance would obviously be the next development beyond the existing open banking ecosystem, which is already one of the most dynamic and exciting anywhere in the world. There's 7 million regular users of open banking in the UK and over 1 billion successful API calls every month. It spawned thousands of new businesses and products. Those who are close to it know that this is a key moment for open banking regulatory regime. We've done a lot of work over the last year through the Joint Regulatory Oversight Committee to set out the next steps to ensure open banking continues to go from strength to strength. This morning, the committee set out its recommendations with a vision of data sharing market which is competitive and scalable for the long term. To achieve this, we're going to move open banking onto a sustainable regulatory framework, which the government intends to develop through the Data Protection and Digital Identity Bill, which has its second reading in Parliament today. Open banking will also transition to a new entity with a broad-based equitable funding model and high standards of corporate governance. And today, we also set out how we plan to get this transition started this year. But we can't spend all our time and energy on governance models. So we also set out an ambitious roadmap of actions for the next few years, again, starting immediately. By Q3 this year, there will be tangible progress across the board on key themes such as mitigating the risks of financial crime and promoting new payment services, including variable recurring payments. Let me be clear, because I know some folk have been worried. This will be the year of delivery on the next generation of open banking. Our plan is ambitious but achievable, and I am committed to maintaining our country's leadership in this field. We won't rest on our laurels, and I want to encourage all of you to work with me to build on the success that open banking has been so far. Now, if data is one limb that's got the potential to transform the financial services sector, the application of artificial intelligence is the other. Although there are already many deployments and uses in the financial sector, my belief is we're barely getting started. AI can help firms identify and prevent fraudulent transactions, detecting suspicious patterns in real time. By analysing data on market trends, customer behaviour, and other factors, AI algorithms can identify potential risks and provide recommendations for risk mitigation strategies. It can help investment managers make more informed decisions, driving better returns. And AI can power new customer service features such as chatbots, which can deliver personalised support quickly and efficiently. The technology has the immense potential to transform the financial services sector. We need to do our job, and that's why the government recently published its white paper on AI, which details our plans to make the UK the most trusted and pro-innovation regulatory system for AI governance in the world. It builds on our recent $900 million investment to build an exascale supercomputer and establish a new national AI research resource. That will provide significant compute capacity that many of you in this room may wish to take advantage of. But even as we support the FinTech community here in the UK, it's vital that we help our firms expand internationally. That's why my final announcement today is the launch of the UK FinTech Census in collaboration with the City of London and Innovate Finance. It's designed to tailor our support for you as we make the most of the UK's access to international markets. When you think about it, no other country on earth combines a seat on the Permanent Council of the United Nations with membership of NATO and AUKUS, a trade deal with the EU, accession to the Comprehensive and Progressive Trans-Pacific Partnership, and being a founder member of the Commonwealth. The census aims to help you make the most of those opportunities by seeking your feedback on 3 simple points. What international markets do you want to break into? What are the main challenges you face? And what further support and services would you like to see? The census opens today. It'll run for 5 weeks, aiming to reach all 2,500 fintechs in the UK. And in order to make it a useful and actionable data set, we will repeat that census annually. In conclusion, ladies and gentlemen, I hope that you are as excited about the opportunities for the sector as I am for you. UK FinTech is in a great place today, but it's our job as government to ensure that success continues and that we reach together new heights, a mission to which I assure you we are utterly committed. I'm a doer by nature. I've worked in disruptive businesses for most of my life, and I want to deliver concrete actions that help you all to thrive. You're already effective at telling us what you think, and I challenge myself and the team on a daily basis, what more can we do to help? So please, let's keep working well together so that at next year's Global Summit, and many more to follow, we're all able to look back on many successful years for UK FinTech. Thank you very much indeed.
Create connectivity for fixed income and derivatives markets, ladies and gentlemen. If, as you move around, you could just keep the noise down a bit, that would be great. Deaf ears, I fear, my words are falling on. Never mind. It has been 5 years since Transfix secured strategic investment from Citi, so let's take a look now at how that partnership has worked. Please welcome James and Steve. Yeah, come and sit next to me here. Great.
Okay.
Good morning, gentlemen. Thank you so much for joining us here at Innovate Finance. Let's start with you. Thank you, ladies and gentlemen. Let's start with you and tell us about TransFIC and a bit of your origin story in brief. I'm sure you could hold forth for a long time, but I'd love to hear how it started and how this relationship got going.
Well, I'll try and make it as quick as possible. Firstly, thanks to the organisers and yourself for having us. So our background story, the company's actually been going seven years now. It's gone quickly. But before that, I was working at a foreign exchange trading venue called LMAX.
Yeah. Just boost you up a bit, I think. Yeah.
Hopefully you can hear me now. I was working at a foreign exchange trading venue called LMAX prior to TransFIC, and I'd met my co-founders there. They were developers. I was running institutional sales, and one of the consistent problems we had was the banks were taking too long to code to our APIs for electronic trading. Typically, it would take them 3 to 4 months. And so I was constantly talking to the banks and saying, can we improve this? But one of the things they kept saying was, fixed income is actually a lot worse.
Yeah.
Fixed income is more fragmented. There's, if you like, higher burden of regulation. And we also have we tend to work with a big bad wolf competitor, and we'd like some alternatives. And so the genesis of our company came into being was I actually had a customer ask for a proposal. They said, we want to replace the incumbent vendor. And we want to build these components, but if you can build all the back-end API components, that's what we would like. And obviously it took some due diligence, etc. But that effectively became our business plan, and we got going. And then obviously soon after met Citi, and obviously we've got a big relationship with Citi, which hopefully we'll talk more about.
Absolutely. Before we go on, I'm going to go into head girl mode, I'm afraid. Guys at the back, can you keep it down a bit as we're on stage having a chat? Thank you so much. Appreciate it. Basically, shut up. Thank you. Right. So, in a nutshell then, tell us a little bit about the problem that TransFIC was solving, if you like.
Yeah, sure. So the backdrop is really that, if you're operating in the fixed income markets now, whether you're a bank or an asset manager, you have to sort of migrate to trading not on the phone anymore or via Bloomberg chat. You've got to go through automated electronic trading routes. And the reason for that is twofold. It's one, regulatory, and one is sort of performance. So, if you're trading bonds on behalf of a customer, guys at Citi, you've got to be able to have an audit trail and prove best execution. And then it's also, to price your customers well and also to compete effectively, you've got to consume a lot of data. The messages are coming in at rates of thousands of messages a second. And effectively, if you're not using computers, you're at a competitive disadvantage to those that are. So that's the backdrop. The actual business problem that we solve is there's nearly 200 trading venues in fixed income across rates, credit, interest rate swaps, repos, etc. And every single one of those venues has a different API. So the business problem that we're solving is we're coding to those different APIs and translating them to a common format. And that makes it much easier for a bank like Citi or other banks, or even ourselves, to build trading and risk applications. It really does, shorten that life cycle to actually build something. So you can think of it almost as Google Translate for APIs. Right. You're putting French, Spanish, German in, and we're putting it all into English.
Okay, that's a very useful analogy. James, let's turn to you. So Citi's involvement with Transit then, how did that come about from your perspective? What were they going to offer you that was so perhaps difficult to provide in-house?
I mean, again, this was very sort of client-driven. We've got a lot of clients there experiencing, difficulties connecting to such a myriad of different venues and really wanting to go to the next level in terms of technology and capability to do that very quickly, very simply, low latency, and efficiently, but also unbelievably importantly, reliably and sustainably. And so with that in mind, we're looking at this point for better technology, for a better solution, but we're also feeling like we want alternatives to the existing incumbent supplier, where we feel a little bit exposed in terms of both from a competitive point of view, one entity controlling too much of the market. On the other hand, we want to make sure that there's the healthy sort of competition in this. The third thing is when we think about what we're really good at and what we really want to spend our time and our limited resources doing, are we the best people to do that ourselves? And I think a view was taken, let's work with this group. We liked the technology, we liked the people, we co-located with them very early on, we'll talk more about that. But actually, if they can hit that thing of producing, number one, good technology that works better than the current solutions. Number two, it actually reduces our risks and our dependency on single suppliers or concentration on a single supplier, and actually gives us better competitive alternative. That's great. And then number three, that of itself will allow us to keep pushing the boundaries of technology and solutions and just keep the thing moving forward. So those were our real drivers.
So that's why you wanted to be involved. But your involvement was pretty tight, wasn't it, right from the word go, because you invested in them as well.
Yeah. So look, one can go out, you can look at who's available to do this. And you might actually find that someone's got some really interesting technology, but actually it's not yet at a scale, it's not yet at a place, and maybe it needs some support. And that support isn't just financial, but of course we can make investments. We did make an investment along with some other financial and customer type investors at the same time. I think we were one of the bigger ones, but we went on the board. And then you get into the whole working and governance relationship, which actually allows us to support the development of the company and help them scale and develop and get even bigger and better at what they do, which we get a benefit from. Now, as I've said to Steve many, many times, really great product and really great innovation and growth is not mutually exclusive with good risk management, governance, and controls. And actually being in this symbiotic partnership, we've actually found that actually we can help each other with that. These guys are really, really, really good at what they do in a focused way. We're quite experienced at working in these big markets and with regulators and with, on a global basis across at least 75 trading jurisdictions, not to mention the 200 exchanges.
Culturally, though, Steve, how was it for you?
But I mean, saying this because James is next to me, but I mean, we couldn't have done it without Citi. But what was really good originally was Citi offered us a space in their innovation lab in London, and essentially we were working alongside 3 developers from the fixed income team. So that was just like a constant sort of back and forth. And they were really, we had some good technology, but we didn't know enough about the fixed income market. So we're really getting sort of educated by Citi on sort of here's what we really want. So that was hugely important. But what I would pick up on the investment side is obviously a different perspective from other VC investors. It's quite interesting, when you're operating in capital markets. When you deal with VCs, or I'm sure people in this audience, they'll talk about Silicon Valley, and they talk about blitz scaling and failing fast, etc. Well, that's a bad idea for us because we essentially we're working with a customer who doesn't want us to fail at all. So you can't fail fast because you can't fail. So it's much more about building a solid product which is reliable. It's got safeguards built into it, and having an investor which understands what you're trying to build and the longer timescales associated with that is pretty important. And then I'd say the other thing that obviously working with a larger bank like Citi brings to the table is when you're trying to build mission critical infrastructure, and it's got to work globally. And at the time, back then we were a sort of a 6-man startup. Every customer I was going to see was like, "Have you got a customer yet?" And when you can actually say, "Well, yeah, we have got a customer," and they're actually willing to act as a reference for us, that really changes your credibility level. Sure. I mean, it really makes a difference. So it's worked out very, very well for us.
Just picking up though, and say, a small startup team working closely with people from Citi. How's the relationship now? How's that grown? Have you got autonomy, or are you still very much embedded within Citibank?
Well, no, we had to move out of the innovation lab, partly because we were too noisy. And we were like, "You lot are going to get out." And we had too many people, so we couldn't get free rent anymore. So it was, we've moved on. We have our own offices. So we're up to sort of 50 people now. And obviously we're working with Citi and 10 other banks. So we've grown somewhat. But essentially, we're building I think we're solving a common problem for all those banks. They all sort of recognise that this infrastructure stuff, connecting to the venues, dealing with a lot of the technology associated with that for, resilience and traffic management and monitoring and alerting is not something that really gives them competitive advantage. It gives us competitive advantage against our chosen competitor. But what the banks want to build is trading and risk applications. So the way we tend to operate is, when we're building something new, we run it by Citi and the other bank shareholders, there's other shareholders and investors and customers, to basically say, this is what we're trying to build. Do you think this is the right thing? So the partnership is close, but we do operate autonomously.
Yeah. It clearly has worked very well. I mean, Citi
Bank, from your point of view, James, how would you describe your partnership with other fintechs? I mean, is this something you're now using this as an example of this? Well, this has worked well. We're going to do this more.
I mean, not every situation is the same, not every set of objectives, etc. But I draw out of it the fact that there's some really important lessons learned here. The lessons learned in terms of understanding each other's objectives, constraints, what you bring. So, you know, Steve and the team bring some expertise and some speed and agility and thinking. And actually some of that noise he referred to was our team and their team co-located, arguing with each other. The speed of iteration you get from that is significantly better than sending out sort of very detailed quotation documents and specifications. So actually there are some great learnings on it. There's also been issues. I mean, you know, we probably design a lot of our compliance and some of our regulatory stuff assuming that everyone we deal with has got a 40-person team to deal with this stuff. Well, actually, when you send the 700-page onboarding form to Steve and his team, he has to fill it in. And so you actually start learning from that and getting a different perspective and bringing that back into your own business, saying, how can we get simpler and easier to deal with? That will accelerate our ability to work with even more startups and smaller, more nimble innovators without compromising our risk controls and governance.
So that's the secret, isn't it? It's learning from that experience. Yeah. I mean, what would you say the secret to the success of a good partnership with a big client like that is?
I mean, it's different fold actually, but I mean, obviously, ultimately, if you're a startup, you get gauged on, you know, happy customers and sales. Otherwise, you know, you're going to fail. But having a partner like Citi who can basically give us guidance, so you know, and obviously it was huge. I mean, I can now say it's 'cause it's public. It's in the public domain that Citi are a customer. That it really helps us. You know, obviously makes us more competitive, you know, versus who we're trying to compete with. And you know, it's a learning experience. I mean, we've learned a lot from Citi. I think we you know, they've learned some stuff from us about, you know, how we release software. You know, so it sort of works both ways. But it's been, you know, a good partnership.
Yeah. Well, on that extremely positive, happy note, I feel like I'm sort of Cilla Black here. You know, I brought you together. It's a beautiful thing. Thank you very much indeed, James and Steve. Thank you. Really interesting insights there. It flew by. We'll be looking at more partnerships later. Listen, it's been a whirlwind morning. I think we're going to let you catch your breath and grab a coffee. Please be back here in about 15 minutes. We've got another great session. Christy Duncan will be here with the CEO of the London Stock Exchange Group, Julia Hoggett, to explore how we're going to reshape the capital markets for the better. And before lunch, we'll also be hearing from Invest HK, from the FSA, Starling Bank, and more. So don't go too far, but enjoy your break. Thank you, ladies and gentlemen.
I'm